Hi and welcome back to the Conscious Day Trader. This is the hyper growth challenge from the Fivers that I purchased last week. This is the third video we're doing on this. If you haven't seen the first two videos, which I talk about the lot size, I talk about the drawdown, I talk about the account size, risk management, go and watch those first and then come back and watch this. Now, if you're joining for the third time, welcome back. Make sure you subscribe and like the video. Today, I'm going to show you something new. I'm going to show you how I've hedged the position. I'm going to show you the live positions. We're currently in a little bit of drawdown, so I'll show you how I'm dealing with that, what my plans are with my analysis on the pound dollar, and how we're planning to get to that $2,000 mark, which is going to get us funded for the second account with the Fivers. If that all sounds good, make sure you like and subscribe, and let's go straight into the video. And before I go in, make sure if you're buying any purchase from the Fivers, make sure to use my coupon 8188 or use the link in the description, and that will give you a 15% discount from any program of the Fivers. So make sure you utilize that, and that way you're helping me as well. Let's go on TradingView and see what the pound dollar has to say, and on our MT5 to see how our condition of the account is in this current moment of time, which is my second day of trading. Okay, first before we go to TradingView, I just quickly want to show you the positions. We're currently $11.50 in profit, but as you can see, we've got some things going on in here, and we're going to talk about this in detail. I had to hedge the position. I didn't want to close the position. We'll see if we need to close the position in a little bit. As you can see, we're currently in drawdown of $43. That means we're $30 in drawdown, including the profit for the day. And we're deciding what to do. As you can see, we had a big push to the upside. I was originally long in this position, and we're going to see why. I believe I was long from this position here, and then it started pushing down and down and down. I still think that we're going to go to the upside, but we don't know when it's going to happen. Is it going to happen during the open, which is now 7 minutes in? Is it going to take us down to equilibrium of the previous day? Is it going to take us to the previous daily low, which is quite far down? So we need to definitely be hedged to expect that. So I don't want to take more loss than $50 on this account, as it's very small. The $50 gives me the flexibility to be able to do hedging, to do repositioning, all the good stuff that I like to do. But everything is going to make more sense when we break down the pound dollar. So let's jump on to TradingView. Here we are. What we're going to see, I've just put the MT chart on there just to quickly have a look and tune our eyes with the pound dollar and where it is up now. Just to jump onto the monthly, we know that obviously we've came back from that 103 back in very close to parity of the pound with the dollar. We pushed back up, and now we're consolidating and we're holding in this fair value gap here. Now this has two things that it can do. It can either come down and take liquidity below the 1.2s, bigger picture, or take liquidity above the 1.3s, which would be the next big liquidity draw, which would be high up into 1.4s. Obviously this is big picture for the pound dollar. Going down to the weekly, we can see that we're consolidating between these two moves, 1.3s. We did get all the way up to 1.3 and then all the way down to 1.2, which was in October 2023, but that is the range which we're consolidating up until this day. Now, looking at the daily, I'm going to throw my levels on there, but I just want to show you when you look at price action and you look at it as a pure chart, what you can see is there has been an attempt to push the price into this liquidity area or fair value gap or overextended candle on this, or push, whatever you want to call it. ICT terms, we've got this order block here and the fair value gap above it. That is the area where I thought price will go and tackle, and it might tackle. We'll see. We're just opening now. However, we did get that early push down, and that's why I've hedged the position. So I'll show you how I did that and why I did that. Now we're going to start slowly building up the picture of what we're looking for the pound dollar. On the tree, I've just labeled all my stuff. First of all, I want to go into the 1 hour. I just want to show you what it looks like in terms of the previous daily high and previous daily low. I've gone with my own lines again. Now I'm trading. I just want to get back to what I like. So we've got the previous daily low here, previous daily low high here, and the equilibrium. These are from obviously the daily. Go to the previous daily, put the low, the high, and equilibrium. As you can see, we've had a retest to equilibrium. We haven't got into the equilibrium level yet. And this is live happening now. So we'll see, maybe it happens now. My perception of this, or my analysis of this, it was that we're gonna go and hunt for this liquidity above the previous daily high and a strong fair value gap there, which is on a daily level. Just put that in. Also, I'm just going to change the fair value gap because it is a daily fair value gap. I think we're going to go and retest that daily fair value gap. Now, if I throw a Fibonacci retracement on there, where do you think this level will be? Just by getting experience and seeing these extensions, you can see that this is probably between the 61.8 and the 76.4. But let's go and have a look. It's at the 70.6, so 61 and 76.4, exactly in between. Now, I've just thrown in the OTE Fibonacci retracement from ICT, and you can see that the previous daily high has a nice area there on the 61.8 and the 79, which is the whole move of that fair value gap. So something to pay attention to, right? So we know that. That gives me a bias to be long. Okay, so now I'm biased long. And then I started trading this during the Asian range. I saw that we had a retest of the previous daily high. We did take liquidity above here. Someone may argue that this is a nice opportunity to go short, but even though this looks like a nice opportunity to go short, my bias was on the upside because of the daily that we talked about in the OTE. Now, what should I have done? Let's correct my analysis a little bit, my trading. This is what I should have done. I should have been patient, because we've taken the high, and yes, we didn't take the previous daily high, but we are consolidating and now creating lower highs in the previous daily high area. So I should have been patient and waited for what? Where has the price retraced to? If we take this on the 15-minute, you will see that we're now in the range of the 70 to 79, which is the OTE ICT range. This is the area where I should have started to trade this. But I was a bit eager. I saw the daily. I thought, right, we're going to open the market and it's going to go up. We are in premium range, premium arena. And when I say premium, is any price between equilibrium and previous daily high. So I should have waited, just to extend that so I can show you. But it's okay. The reason I hedged is because I saw this. We're at equilibrium and we're pushing price. Now that is one idea. We're getting into this fair value gap here. This can start pushing higher. So I do want to be biased long, but there is a possibility that this starts hunting liquidity below these areas all the way to the previous daily low. And because my account is very small, I don't want to carry a big risk for that to happen all the way down. Now, knowing that information, let's go and see what that means in terms of hedging. You can see here on the type of buys, I have on the top side, I have 0.05 and 0.05, which is 0.1. So 0.1, 0.2, 0.3 positions long in total. Now, I didn't want to take 0.3 positions all the way down to the previous daily low. So how can I reduce the risk by, let's say, 0.1, so I'm able to extend the price if it goes down, but still get benefit if it's going to my bias, which will be long. So what I do, I just hedge the whole positions by 0.1 lot. Now, what I have done with that, I've got 0.1 selling, and I've got 0.2 long, or 3 total, but because of the 1 minus, is 0.2, 1. So it's like starting a trade with 0.2 long at this position. I know for people that don't know hedging, that might be a bit complicated, but this is a way that I can deal with a trade going in the other direction, but having enough room to see it through. If I've got it wrong and it's going to the previous daily low, that way I can still manage it and make profit out of that move. Now, what can happen here? Two things. We're either going to be going up. If we're going up, we'll be benefiting from our 0.2 lots. If it's going down, I've got this one lot protecting me, and I can use the profits of that lot to decrease my position. We'll probably see that tomorrow in tomorrow's video when I explain it and when we see the outcome of this. But what I can do, because my overall position is going long, right? I can use the hedged profits to decrease my risk on my worst position. And what that will be is I can either use the top position here and I can take some positions out of that. Let's say I have profits of $50 going downwards. I can, let's say, use $20 of that to keep it to add into my account and use the other $30 to pay my worst hedge on the top position. Now you might say, why go into all this pain and you just don't close that position and start fresh now? That's where, guys, you have to understand your psychology and how your mind works best in order to pass challenges. I have done this for so long now, and I know that me dealing with a trade and understanding and managing it with my positions and hedges, I am a lot better at dealing with that than closing, let's say, a $30 loss and then trying to build up a $30 loss. It's literally the same thing. If you think about it, you can close the trade, otherwise you can hold the trade, or you can delay, let's say, the trade to take a better position as you go down. But that's the key with trading. We have to understand what works for us and our psychology and how we can pass challenges. Now, if you do this and it doesn't work, obviously you shouldn't do it. But if you do this and it does work, then you've got something that you need to bottle and make sure you protect it well. Let's summarize a little bit about what we did there with hedging. So I had 0.3 going upwards, right? I was in a position where I was not happy to take 0.3 risk all the way down to the previous daily low. How can I decrease that? I can do two things. I can either close 0.2 position, so I'm left with 1, so take the loss, or I can hedge 0.2, which I could use that profit and potentially close the other side of the trade. If that is complicated, guys, you can do two things. One, make sure you do some research on what hedging is and how you hedge the same asset, not multiple assets. Two, you can join the Vanguard. I have a detailed video of how I do the hedging. If you do want to join the Vanguard, make sure you write Vanguard below. I am going to close new applications to the Vanguard in July, and I will tell you more about this in the future. But if you do want to be in the Vanguard, this is the time. Make sure you join by writing Vanguard below. So yeah, that's the summary on the hedge that we're currently in. Just to show you again, because it's currently moving, as this is going up, even though everything is red, you can see the price is decreasing. Why is that? It's because I'm more biased long, as we said from my analysis in the daily. If this comes all the way to the top side here, I will be in profit, okay? All I'm doing with this is protecting the downside. And now as I can get higher and higher, let's say I get to my buy 0.1, I might even start hedging a little bit more, just decreasing a little bit more the risk. So as it pushes back down, I can use that profit to manage my trade better. Guys, this is advanced level hedging and trading. I wouldn't recommend it to beginners, but you asked me to show you how I pass challenges. This is one method that I do use, and I know it's complicated and I know it's good for me and it might not be good for everyone, but I'm going to have to be honest with you. This is how I'm dealing with this current trade now. What will be an easier option, but don't have to think about all this. What you can do, let's say I have my two positions on the top here. They've gone down to 13 and 20. That might be too much. You just close it and you open a third position down here. So now you'll be eating that $20 loss and you'll be happy days managing it without needing to hedge anything or try and think closing positions either side. Whatever works for you, let's keep doing it, guys. That's what's going to get us there. One more thing that I'm going to tell you. I am in the process of writing a free NLP book for you guys to see what NLP is all about. Why am I raving so much about it? Why am I doing a course on NLP? And how is that helping me? NLP has helped me massively to deal with these situations here. NLP is the reason I am being able to trade calmly. And you see, when I traded live, multiple people would say, how can you deal with these drawdowns? How can you deal with this way of trading? It's because I can, in trading, in NLP, we call something which is called dissociation, right? So I can dissociate myself from the current situation of the trade for a benefit to become a little bit more objective of what's happening into the market. And there's super easy ways you can do that. And I'm writing a book, an ebook, probably going to complete it maybe in a couple of weeks' time, maybe sooner, who knows. But if you do want that, just write below ebook, and I will make sure that I'll get you on the list so I can send you the free ebook. I think it's going to be quite transformational for you guys to understand how I do things like perceptional repositioning, things like how I can use parts work, or how I use language which is called meta in NLP to be able to achieve better results. And here we go. We can see now we're crashing that drawdown. We're back into $36 from 45, I believe. And as this is going to be coming up, and you can see there on the Bollinger Band, you can see we're going to get probably some reversals here around this area where we get into this fair value gap. We might think to either, I can do two things here, and this is live as it's happening. What I can do to decrease risk here, guys, I can either reposition this 0.1. If I close 0.1, I will then be 0.1 biased to the top side. Okay, because I was 0.2, I would have closed 0.1. I can even reverse the trade by adding a short position of 0.1. So then I'll be biased short. This is the flexibility that you can do with a hedged account. Unfortunately, you can't do it in America. If you're watching this, you can't legally hedge the same account. If you're from the UK, you can hedge, which is really, really nice to have. There we go. That is the summary of this trade. Guys, as I've told you, I've worked really hard with the fivers to get your discount of 15% now. If you do want to join me on this hyper growth challenge, so make sure you use the description below, the link for the fivers, and you'll get a 15% discount, and you can join the same program that I am on. I am on the 40,000, which gives you a 20 grand. And as you get your first milestone, you get paid and you get your doubling of account to 40,000. Or you can use any bootcamp high stakes account to pass the challenges. There we go. If you enjoyed the video, make sure you like and subscribe to the channel. And tomorrow you will find out what happened with that hedge and how we detailed and analyzed it. I can see now something happening in the background and I'll need to make action. Until next time, have a good one.